What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 28. It's July 19th, 2023. We made some trades today, so let's get into it. First thing we need to talk about today, let's talk about all of the important levels that we have on the chart. So we have this zone that we drew from the pre-market. I think this goes all the way back to around maybe 6 o'clock or 7 o'clock this morning, and prices were actually trending below this zone for a good amount of time. So let's just hit the live chart real quick and look at what happened in the pre-market so we can understand what led to the uptrend that started when the market opened today. So as we can see, let's stretch it out full screen. Okay, auto fit. There we go. All right, so we can see in the pre-market, we were actually trending down for a good amount of time, but all we did was really come back to yesterday's closing price, which is, I think that's 35,138 or 139, one of those. So once we came back to yesterday's closing price, that acted as a very strong level of support. We formed a higher low off of there, and then from that point forward, the uptrend was on. And that actually is what brought us into today's session at 9:30. So let's go ahead and go back to our screenshot. So once we came into the market at 9:30, we see prices pretty much have a very strong spike to the upside, which is very interesting because if you look at all of the other days that happened this week, so this is Monday from the 17th, we had very strong uptrend. Yesterday on Tuesday, July 18th, we had a very strong uptrend as well. So then today we come back and we have a spike at the open. That pretty much let me know that we had a very high chance of having a very similar day to what we've seen all week long. So that already put me in the mindset of looking for long trades. So I just kind of sat back. I was a little bit patient and I said, okay, let me see what the market is going to do. And when I see my opportunities, I'll get in. So once we see that spike to the upside, we see prices come back. They established a consolidation zone that eventually led to a double bottom that's followed by a higher low, and that's what led me to trade one. So the double bottom is one of my bread and butter go-to setups because it's really a fairly simple setup to trade because it's very easy to spot, especially when you're in a trend like we were today. So whenever you see a double bottom, you want to see two specific points that have the same level of support that typically come at the end of a pullback during an uptrend. So once you see that double bottom, then you start looking like, okay, I'm seeing the uptrend starting to resume. Now let me look for that higher low. And once I see that higher low, then I know that the uptrend is definitely confirmed once again, and the move should be moving up a lot sooner than later. So once you see that higher low, then you say, okay, it's confirmed. So once you get that higher low, the only thing you want to do is just wait for prices to come back into the support level for the higher low. Now, usually I would take a level of support from a trend line and just slap it across that higher low at the bottom. But since we had a zone right here today, the zone was perfect enough. So once prices came back to the bottom of the zone, I went long and took it back up to my scalp target right here next to this wick at point number 1. And I think recognizing double bottoms is very essential when it comes to trading because you actually see these pretty often, more than not. So I just want to run through some examples that I have from my notes and show you guys exactly what I mean. So look at how in this scenario, this is from May 2nd this year, we had a double bottom, higher low. Notice how once you made that higher low, prices moved away, eventually came back to retest it, and then the uptrend resumed and continued. And you even had another retest as prices came back to that level of support from that higher low again a couple of minutes later. So let's just run through all of these real quick. So this one is an example that actually looks pretty similar to what we saw today. Look at how we had double bottom, a higher low that got established at the bottom of the consolidation that eventually led to an uptrend. Double bottom, higher low, uptrend continues. A double bottom, higher low, uptrend continues. Same scenario here. The only difference was we had a double bottom and a double bottom that led to a bull channel rather than a bull spike. So it's all types of different ways that the double bottom and higher low situation can happen. That says LH, it's supposed to say HL. But it's all types of different ways that double bottom can occur. There will be some scenarios where you don't even have a higher low. It'll just be a double bottom and a double bottom, and then from that point forward, prices will just run up. So imagine a move like this coming after a double bottom. That happens pretty often too. Here's another example: double bottom, higher low, came back to retest it once. Once it comes back to retest that level of support, you can use that as a reference point to go long from. Same scenario here. We can go through a lot of these double bottoms for a long time. So here's another example that's very actually similar to what we saw today: double bottom, higher low, that's within a zone. Only difference was on this day, the double bottom reversal was more of just a pullback. Now that's another thing that you got to keep in mind too. You could have a double bottom that usually comes at the end of a downtrend, and on most occasions, that double bottom will have enough momentum to reverse the downtrend and start an uptrend. But there will be some occasions like this one that we're looking at where you have that double bottom, but all it does is lead to more of a retracement, like a pullback really quick, where you can get in and get out, but then the overall trend will resume. So one of them, this is the one that I felt like was the most similar to today, because we had that double bottom, higher low within a zone. So always remember that when you're thinking about double bottoms and looking for double bottoms, because once you see those three things, I'm not going to say it's guaranteed that the market will go up, but the probabilities of that occurring increase dramatically. So always remember to understand those higher lows. I'm trying to go back to my screenshot for today. There it is. Okay. So look, double bottom, higher low. I wait for prices to come back and retest it. And I took that trade the same way I did in my notes all of the time. And that's what you want to do when it comes to the market. Wait for your best setups and then take your trades when you see them and execute. So then once we got done with trade one, we saw prices actually come up to retest what used to be the swing high for today. And then once we got to that level, we moved past it, consolidated for a while, and then continue moving higher. Now within this consolidation, that led me to trade number two. So I went long right here as prices began to pull back. Now what I need to do is I need to hold my best setups, because looking at this trade, there really wasn't too much of a reason for me to get out of this trade except for being scared. On trade two, I was like, man, I don't really want to give back the gains that I made from trade one. And I know from these past few days and these past few weeks that buying at the highest prices isn't necessarily the best idea. But when it comes to a strong trend, sometimes the pullback is going to be very minimal when you're in the first initial stages of the trend, because that's when you'll have the most buyers more than likely. Now, as you get later on into the day and you start to see the market pull back, then that's when maybe you can start looking for pullback entries into the market where you can get your prices at lower levels. But when the trend is on its way up during that first leg, most of the time that first pullback is all you're gonna get. So if you don't go long right there, then you're gonna miss out. So I had the right idea right here at trade two, but I just gotta hold it. And another thing I want to talk about, I don't think I actually talked about this too much on the stream, but it's something that I take into consideration a lot. So let's discuss it. So I want to talk about how high volume candles can be used as a reference point for you to draw zones going forward in the future, because this is something that I've seen in the market a whole lot and that I use pretty often. So you know how I like to use my zones, right? So whenever I see a candle that has high volume, I just automatically keep that candle in my head, and I'm like, okay, I want to see how prices are going to react around that candle going forward in the future. Now, a lot of times, before you even have a consolidation zone get formed, you can just box up that candle that has that high volume, and you'll be amazed at the results that you get. Now, how you box it up really depends, because sometimes the consolidation could go from the top of a wick to the closing price for up candle. But in some scenarios, the entire consolidation could span from the top of the wick to the bottom of the lower wick, and it could be that whole entire zone. So it really depends on the scenario, but in some way, shape, or form, those high volume candles are going to hold up in some type of way. And if it's a smaller candle like this, you can draw the zone completely on that candle. But let's say if it was a bigger volume candle like this one right here that we had at the open, where the range for this candle is extremely larger than the range that we had for this one. Both are high volume candles, but they interact differently. Now, when you have a candle like this, it wouldn't really make sense to draw a zone from the top all the way to the bottom because the candle is so large. So what I like to do and what I've noticed a lot is that the candle that comes right after that high volume candle is usually the candle that you want to start to use for a reference point. So if you look at the candle that comes after the high volume one, this one right here, look at how the bottom of this wick served as the upper level for that consolidation zone that we based that higher low off of. So that's not a coincidence right there. Notice how they line up exactly perfectly. And the reason that that happens is because once volume comes in, volume is just the amount of contracts that have been traded throughout that time period, whatever you're looking at. So since I trade a 1 minute chart, this shows you the volume for each one of these 1 minute candles. So if it's more business being done at a certain price, then that means that when prices come to that level in the future, then more than likely there'll probably be more business that gets done and there'll be more volume that comes in because you already have people that took positions right here before. So if prices come back, they have a decision to make. Either they can cut their trade for break even, they can add to their trade and put more contracts on, and other traders in the market might decide, well, I didn't get in last time, but prices are back here again, so maybe I could get in this time since I have a second chance. So that's what volume tells you. It tells you where the most important price levels are. So that's why when you have high volume candles, it's going to be something on that candle that's going to make a difference. Now, what part of the candle, that's up to the trader, and it really depends on the market scenario. So sometimes it could be the top of the wick that makes the difference. It could be the closing price, it could be the opening price, or it could be the lowest wick on the candle. You just have to figure that out as you go in the market, but just always know those high volume candles usually make a big difference. And if the high volume candle is too big, use the one candle that comes right after it as your reference point. So that's something that I picked up on in the market. I just wanted to share real quick. So after trade two, remember, biggest lesson I learned, hold your best setups no matter what. Accept the risk that comes with your best trades. So after trade two, we broke out of the consolidation zone. We continued moving higher. The uptrend continued. And then once I saw this one candle pullback, I got into the market. Now, I wouldn't say that this is usually my type of trade because I like to wait for prices to maybe come back a little bit more, like maybe come back to the bottom of the zone, or excuse me, the top of the zone, and then I might look for the long entry trade right there. But you always got to remember what the overall market direction is and what the overall market strength is for the trend that you're looking at. Because the trend was so strong today, I was like, the probabilities of us coming all the way back to the zone is very unlikely. And if we do come all the way back to the zone after the trend has been so strong, that might actually undo the strength that the uptrend had, because now a lot of buyers are going to be pretty hesitant. Like, the trend was strong, but we pulled all the way back. Maybe we need to wait. So if the buyers aren't getting in, then more than likely that could push prices back down. So I'm like, okay, I think I can rule out prices coming back to the zone. So then I looked at the trade from before and I was like, if we had a very small pullback before, more than likely you'll do the same thing, because it's not like it's just a million new people that are coming into the market. Everybody who is trading from over here is still trading right here. They're still trading as time goes on, still trading over here and still trading over here. It's pretty much the same group of people that's trading this market. So I'm like, if the see, you got to remember what price represents. Price represents the consensus for the market based on all of the buying and selling orders from everybody that placed orders within that time period that that candle shows you. So this right here is showing us that the general consensus of the market was that they didn't want to wait too long for the market to pull back before they started getting in. On this occasion, we had a 2 candle pullback. Now we can go back to multiple other charts where we saw 1, 2, 3, 4. You know, this whole entire pullback scenario lasted from 10:15 to about 10:45. That was a 30-minute pullback. So on days like that, it's like, okay, we know that the trend is up, but it's not as strong. But on a day like this, you got 2 candle pullbacks and that's it, and then the move continues. So I'm looking at all of that information when I'm thinking about trade 3. And then ultimately, I ended up coming back to that concept I talked about earlier when it comes to high volume candles. Look at this green candle right here that actually led to that swing high up until this point at 35,300 and let's call it 375. So this is that candle right here. Let's follow that all the way down to the volume. And then boom, look at what we see. One of the highest volume candles that occurred within probably the past, 5 minutes, and then before that, the past 10 minutes. So remember those high volume candles, they usually act as a good level of reference, and you can use some type of level within that candle. So let's move on to our next candle and see exactly what prices came back down to. Notice how they didn't necessarily come back to test the opening price of that candle, but they pushed down far enough into that candle for you to realize that that right there was probably the pullback. So once I saw prices move away from those lows, they closed away from the wick on that candle. I went long on the candle immediately after, once that candle closed, because I was like, look, we had a 2 candle pullback right here and then a 1 candle pullback right here. More than likely we'll see the same thing. And if we don't, well, I'm willing to take that loss, because in this scenario, I'm trading in line with the trend from the best possible prices that I can get. And I knew from trade 2 that I need to hold my best trade. So on trade 3, I went long right there. I didn't hesitate, and I just held it up to my scalp target. And once I hit my scalp target, I was done for the day. I made 3 decent trades. 2 of them turned out to be profitable, so I'm happy about that. Let me call it a day. And overall, I would say that today was very successful. I came in, I was patient. I could have went long at the top of this swing right here. I could have went long at the top of the, at the bottom of the zone right here, or I could have went long after I saw the double bottom. But I learned from my mistakes from all of my past days, and one of the biggest mistakes I was making was I was completely correct about the idea that I had, like, okay, I'm looking to go long in the uptrend, but you also have to make sure that your timing is right. So today I came in, I was patient, I waited for what I wanted, I put my orders at the best possible price levels, and I didn't chase the market. I let the market come back to me, hit my orders, and then I let my trades run for the most part the way I was supposed to. Now trade 2, I got to work on holding my best trades. I really got to focus on that and key in on that. So that's going to be my biggest focus going into my back testing session tonight. Number 1, focus on holding your best trades. But before that even happens, you also got to be patient enough to let your best trades come to you. And you also have to be disciplined enough to not take any crappy trades in between your best setups. And that's a problem I've been having also. So those are the 3 things I want to focus on tonight in my back testing session. And one more thing. I just want to talk about how understanding certain price patterns can help you throughout the entire session. Because notice how we had an uptrend today, right? But this entire uptrend originated from this double bottom that we saw down here below. So imagine if I didn't identify this double bottom correctly, or if I identified it when we were like 20 minutes into it when I was at trade 3. I would have missed out on opportunities at 2 and opportunities at 3 more than likely. So being able to recognize what you see in the market is very important, because a correct analyzation of what you see, analyzation, is that a word? It's a word today. A correct analyzation, okay, y'all know what I mean. Analyzing the market correctly will allow you to have better trades in the future, because now you can understand the overall market direction. And once you understand that, it gives you more confidence to take your best setups. Because I knew that today was definitely an uptrend, it gave me confidence taking trade 2, and it gave me confidence taking trade 3. So I think that's really what it comes down to: believing in your trading plan and being able to recognize what you see so that you can make the right decisions. And that's pretty much all I got for today. I hope you guys learned a lot, because I definitely did learn something about double bottoms today and about those high volume candles. I want to make sure you guys remember that. But that's all I got. I'll be back tomorrow, July 20th. That is what, Thursday. I'll be back at 9:30, maybe 9:40 a.m. sharp, somewhere in between there. But until then, you guys, take it easy.